All right, all right. I think we are live. How's it going, everybody? Welcome, welcome. Welcome to We Talk Money. Today it's just me and Travis, but we've got a lot to chat about today. There's been a lot of earnings releases this week, some really positive developments, also some things that have just gotten absolutely destroyed. Travis, it feels like the market sentiment is the complete opposite from where we were in 2020 and last year in 2021. What do you make of it?
Yeah, man. First of all, I'm exhausted. It feels like this week has been a month long with the amount of earnings reports I've been having to go through. But yeah, I mean, look, this is a very different environment than last year. Last year at this time of year, it was like easy money. Everything was hitting crazy all-time highs and crazy valuation multiples. ARK Invest and Kathy Wood were the talk of the town. And today, ARK is underperforming all the indices, has lost all, or not all, but a bunch of investor capital. All its positions have gotten hammered. Stocks like Teladoc, which are down 40% after their earnings report yesterday, that are in, their top holdings list, not helping. So yeah, I mean, and overall the environment, we know we've talked about this over the last few weeks and months, but the overall environment has been, paying for tech and growth stocks. And that really has continued, like even with some pretty decent earnings reports this week. There were stocks like Spotify or, obviously Netflix last week, that were getting hit. Google, when it first reported earnings on Tuesday, even though the earnings looked pretty good, the stock was down. So it's been tough. We did get a nice bounce today, kind of midday. It looked like the markets were going to continue to sell off this morning, but then we did get a bounce, which gave some investors some optimism. But look, overall, all the darling stocks of last year, for the most part, have gotten just crushed. I think that's overall pretty healthy though, because now we've got like a repricing of all these assets that got too hot. Now the market's going to probably take them too low in a lot of cases, and that's going to provide us opportunities. So yeah, I mean, it's really tough, but that's what makes this game so hard and so fun and so rewarding.
Yeah, absolutely. Well, I know we've got a lot to cover. We'll go through a bunch of earnings. We'll look at charts. We'll look at what Travis thinks is good opportunity and maybe what still has some downside to go. And then we'll talk about also how Bitcoin fits into all this. The theme over the past year with crypto and Bitcoin specifically has just been, Bitcoin's been riding the back of the stock market as a risk asset. A lot of people are just looking at equities and crypto and not wanting to be the greater fool. There's been tremendous growth, but there's also been a lot of things that have imploded. And so as an active trader, you can come in and take advantage of this stuff. But before we go any further, guys that are watching live, if you don't mind, just going ahead and hitting the like button. And that way the algorithm can wake up and we'll get everybody in here and just get rolling. So yeah, thanks for being here live, or if you're listening to it on the podcast later, welcome. And yeah, let's just, I guess, we can start by talking about what happened today with, was it Amazon, Apple, etc., and then also all of this week. But if we take a look at the earnings whispers calendar, I mean, you can see this was really a massive week. Everything from Alphabet, Microsoft, Coke, Boeing, Facebook, Twitter, Amazon, just on down the list. All the majors were reporting this week. And I guess, like, Trav, if you had to just say what the theme was this week, either good, bad, mixed, what's the vibe out there?
I would say uphill battle. And overall, a very mixed to maybe slightly negative bent from the market. These, especially companies that grew during the pandemic, companies that grew really aggressively during the pandemic, they're facing not only an uphill battle in terms of their actual earnings, right? It gets a lot harder to grow if you're comping against periods where you were growing 20, 30% and, everybody was inside and online. And if that was really helping your business, well, now that the world is normalizing again, it's going to be really hard to grow from that. And so companies are already facing an uphill battle from comparisons to stronger years. Companies are facing an uphill battle with, inflationary pressures on the cost lines. And then in addition to that, you've got companies facing an uphill battle when it comes to expectations. The market environment, the market sentiment has totally shifted. once multiples started compressing, investors didn't want to buy the dip on stocks, even if their earnings were pretty solid. So it's just an uphill battle. And some stocks are still going to be able to get up that hill. Like we look at Apple today after hours, it's up 4 or 5% after hours. And that's because, they delivered the goods in terms of the numbers. The numbers beat expectations. They announced a $90 billion share buyback. So they're giving investors more of what investors want to see. And then on the flip side, you can look at a stock like Teladoc, which reported yesterday down 40% because they, had initially said, I think a quarter or two ago, that they were going to continue growing at 30% plus. They had all this confidence in their business. They were going to continue to generate, higher levels of adjusted EBITDA. And then they come out this quarter, just one quarter later, and they're like, oops, we're pulling that guidance. We are going to grow much slower than we predicted. And so, that's going to be a battle that the companies are going to continue to face as we move forward into the earnings season. We had like 50% of the S&P 500, I think, reported this week. So we got a lot of the biggies out of the way, but there's a lot of other smaller companies that are still yet to report. And, it's going to continue to be tough. I think this environment's going to be tough for companies, and it's going to be tough for investors. Like, this has become a very tough market where you've got to really do your homework and pick your spots rather than just buying blindly into whatever's hot like we did last year.
Yeah, it's wild. This is a list of ARK's top holdings and the percentage off of the all-time highs. I mean, you've got everything, and this was 2 days ago that Charlie posted this, but you've got everything from Robinhood that was down, over 85%, DraftKings, Shopify, like just a bloodbath, right? This almost looks like a shitcoin list in a crypto bear market.
Yeah. The moves in some of these stocks have been just unbelievable. And we said last year, we did actually say, even during some of the hot times, I think, you and Nikki and I all said, price does matter. In these cycles, whether it's stocks or crypto, price and valuations do matter. Sentiment matters. Like you have to be careful with this stuff. And I didn't think it was going to play out so quickly in this sense, but yeah, we're seeing that, that sentiment and the valuations can shift a lot. But the good news, I will say the good news now is that a lot of these stocks, especially the ones that are actually putting up, okay numbers, a lot of those stocks that got whacked are now at a level where the risk reward has shifted again. So it shifted from last year being like, how can you make money buying at this valuation, to, oh, now you're buying this thing at a below market multiple of earnings. Looking forward 5 or 10 years, this actually might work out pretty well. I'll give you an example, 2 examples actually, Spotify and Netflix. Netflix, for as much, shit as people are giving it, with them actually losing a small amount of subscribers quarter over quarter, the stock's now down by 60 or 70% since late last year. So the valuation has compressed so much. It trades for, I think, 14 or 15 times forward earnings, that you don't have to believe a lot if you bought it at today's price to actually have an okay return over the next few years. Because here's the thing. Yeah, they're having some short-term issues with subscribers and whatnot, but they've got this ability to potentially add lower price advertising tiers. They've got the ability to, incentivize some of the password sharers to potentially pay a couple bucks a month to keep those other account sharers on Netflix. And that could be a lot of incremental revenue for Netflix. So what looks like a problem for Netflix right now could actually become a revenue opportunity for them over the next couple of years as they work to fix that. So those are the kinds of examples, I think, where, look, this has been really tough, but if you stay in the game and you can continue to do your homework, then there's actually setting up some pretty good setups for the next few years.
It's always interesting when you see a chart like this that, is down 70+% in just a couple of weeks. And preceding that was basically a decade of just a straight bull trend, right? And granted, we've seen other large cap stocks do this in the past, like Apple and, just where you have an established trend, you get a deep pullback, which in the future turns out to be like the best buying opportunity. You also see this with Bitcoin and other cryptos a lot, but it's so scary to a lot of people to look at this live price action where you've just got these massive red candles against you. and have the conviction and the confidence to go in and buy against the blood, right? But like you said, that's where the risk to reward shifts from, okay, everybody on Wall Street bets is going ape shit over this stuff and prices only go up and blah, 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 right? What that narrative was over the past couple of years, to max fear and pain in the markets. But that's literally where, like you said, your risk to reward is the best. And I don't know about you if you're buying Netflix here, if you're looking for lower prices, but whenever I see a chart like this is where I just start to get really greedy and really like excited looking for opportunities. So are you looking at this and you're just allocating capital? Are you waiting? What's your thought process here?
Yeah, so on Netflix specifically, I haven't aggressively bought any yet, but I'm kind of doing the work to figure out like what that price is, where my line in the sand is that I do want to buy it at. Because I think if we get overall market weakness, then it could take down a stock like this that's already out of favor to levels that just frankly become silly. And those are my favorite times to buy. Like you said, the same thing happens in other markets like crypto, where imagine that dump to 3 or 4K during the COVID sell-off, right? Where that opportunity to buy Bitcoin was, a multi-year massive wealth generation opportunity. It felt like shit at the time, but,
Yep.
but that was,
I don't know. I mean, in the room, it felt pretty good because we're so used to it, but we're just, I don't know, weird like that. But yeah, when you're facing a candle that looks like that, you're buying in the face of like blood and uncertainty, right? So you have to have conviction, because if you're second guessing yourself or you're unsure, you're not going to have the confidence to pull the trigger there.
Yeah. Yeah. So yeah, I like, while I haven't actually aggressively bought Netflix yet, I'm really digging in and getting the work done, because I think we're getting pretty close to a level that might be very intriguing if you're a longer term investor.
Yeah.
But yeah, again, I mean, it also, this tough market environment does lead me to be slower or more cautious on actually pulling that buy trigger than I otherwise might be on some stuff. But that's okay too. You can, as Nikki often says, sometimes you can pay up for confirmation. So that is also a strategy, if you are stalking some of these things that are down a lot. But
yeah. We got a question. Crypto VC was saying, with so many people bearish now and the dollar index so high already, this seems like a decent time to accumulate to me. Thoughts? So I guess we could hit this from a couple of angles, right? We could look at Bitcoin. We could look at obviously the stock indices and individual stocks as an example. But, to me, the way that I'm thinking of Bitcoin right now is because it's in lockstep with the NASDAQ right now so closely. I really have been looking at this week to see what the stock market's going to do. And we actually had the potential for an inverse head and shoulders last week, which got negated over the past several trading days as we made a new lower low. So, it's always hard to time bottoms in Bitcoin when you don't have an aggressive rush for the exit panic washout, right? Those are my favorite times to buy, is when Bitcoin's 70 or 80% off of all-time highs. And then you get like a massive washout where everybody's just rage quitting and just, running for the hills. That's typically where you get the most aggressive bounces. But right now, with stocks feeling so heavy, like, yeah, I agree. The narrative is there, right? We've got inflation. We've got, on a fundamental level, we've got countries that are making Bitcoin legal tender, right? We've got just development left and right and all these positive moves. And the right thinking would be, or a rational person would say, well, why isn't Bitcoin's price going up? Well, there's not an immediate, flow of like good news equals higher prices immediately, right? The markets need to coil up. They need to shake people out. It takes time to build momentum for the next explosive move. So when I look at Bitcoin right now, I'm still long, but am I aggressively buying right now? Not until I get confirmation that there's some kind of immediate bullishness, right? If we just take a look at the chart, you can see that, we've basically been flat. Not only have we been consolidating since the beginning of the year, right around the 40K range, but when you zoom out even further, we've been talking about this 45K price magnet that we've been in since the beginning of 2021. So the fact that price is even holding up here, I think is a solid thing. But I have a lot of dry powder and capital ready to go if we do get that washout. I still think we haven't hit like peak, panic capitulation like we've seen in 2013 or 2015 or even 2018. So I'm waiting for either trend continuation where we can start buying dips and breakouts again, or a panic. Either way, I've got about a third of my portfolio ready to go for those opportunities.
Yeah. As far as DXY and Bitcoin are concerned, they do have, some negative correlation, but it's definitely not, a 1-to-1. But that is something to keep an eye on though, as well. DXY, it's basically, the dollar mostly versus the euro and the yen. I think the euro, yen, and pound make up like 80 or 90% of the DXY basket. So it's basically dollar versus, a basket of euros, yens, and pounds for the most part. And
Yeah.
especially when it comes to the euro and the yen, I mean, the yen in particular has been so weak against the dollar, but so is the euro because, and this confuses people, right? People are like, why is the dollar strong with all this money printing we've been doing? Well, guess what? The US has been raising interest rates, which means now if you're buying government bonds or US assets, you're getting higher rates. And if you look over into what's happening in Japan, they've still got rates at 0 or 0.25%. And so that's why their currency is declining so rapidly. They're at a very inappropriate interest rate still. And you could argue the US is too, but at least the US is like at least moving towards the right direction. And same thing in the euro area as well. They're a little bit behind in the rate side as well because of what they're doing or what the energy crisis that they've got going on and everything is. They're like kind of stuck in this weird spot where they don't want to like kill their economy by raising rates too much, but they also know they need to tackle inflation. So the euro and the yen are moving more slowly even than the US in raising rates, and therefore the dollar's gaining against both of those. So that's kind of an oversimplification. Obviously, there's a lot of variables that can move currencies relative to one another. But yeah, I mean, dollar strong right now means that that could be putting some pressure on Bitcoin. And so, if that flips, like if you get the dollar eventually weakening again, then maybe that helps Bitcoin. But I don't see a 1-to-1 relationship when I look at that correlation, but I do see some negative correlation. So that would be one of those variables that could probably help Bitcoin in the right market, but you'd need other things as well to influence that.
Yeah, that's a great point. Yeah, some people are like, they don't understand that like the dollar compared to other Forex currencies or other fiat currencies can go up and Bitcoin can go up. Like they're not directly correlated. So I think that's a good point to make. All right, let's see. So let's talk about what happened today. So today we had Apple and Amazon and Microsoft. And if we look after hours, let's just go down to like a really short-term time frame. And you can see, you guys that are watching the video, the price action that's highlighted here in yellow is the after hours price action. Apple actually was looking bullish and then it just rolled over again and actually went red. So there's quite a bit of volatility, a lot of emotion around this earnings week. Microsoft is down, Google's down, pretty much everything's selling off right into that after hours session. Trav, what do you make of that? I know there was some positive news on Apple. Microsoft was good. Facebook was kind of a mix. Amazon, bad retail, good AWS. What do you make of this?
Yeah, I'll have to check to see. There may be, obviously Apple's still probably going to give guidance on their call. So since we're live, I'm not tracking what they're saying like live as far as the earnings call. So there could be some issues with guidance. That was one thing I wanted to watch with Apple was what's the impact from what's happening in China, both from a demand and a supply perspective, because on the demand side, I think China represents something like 15 to 20% of Apple's revenues. And then on the supply side, obviously they've got a lot of their component and chip manufacturing located in China. And when China has a lot of that shut down, Apple could have a hard time actually meeting demand. And so you could have revenues, growth issues for a quarter or two based on that. But so that didn't show up in the numbers they just reported for this current quarter. But the question is, what are they guiding to for next quarter? Are they giving any visibility that could be having an impact on them later in the year? So that may be why the stock started to sell off a little bit. I'm not I'm not sure, but that was something that I did want to follow up after our show, because that's going to be really key. When we have these earnings reports with not just big tech, but any companies, there's sort of two main buckets of things you look at. You look at what were the numbers during the quarter, especially relative to the expectations, and then what are the numbers that the company's guiding for the future. And sometimes actually the guidance numbers are even more important than what the company just reported. So guidance being forward looking tells us a lot more about, what's to come for the company. So those are the two main buckets of things that can move the stock. Sometimes a stock will report great numbers and it'll be down after the earnings. And people are like, what the hell? They reported good numbers. And it's like, their guidance was not great. So, and vice versa, you could have bad numbers, but guidance is like, hey, things are improving, like back in 2020, for instance, coming out of the worst part of the COVID stuff. And so numbers could be bad and the market could just overlook that because it's like, oh, things are getting better. We're going to, bid the stock up. So
yeah,
always want to keep that in mind. So with these big tech companies, like Apple, like I said, we'll have to follow up on what they're saying about guidance. But, in general, it's going to be difficult for the next couple quarters for a lot of companies that benefited over the last 2 or 3 years. Like I said earlier, just naturally, as they get larger and they grow at high rates, it's going to get harder and harder to grow at those same rates. So that's something that you always have to kind of factor into, buying stocks, especially when they're hot and when, they've been fundamentally doing well. Is like, okay, but what's actually priced in and what are the expectations now? What has the market built into the expectations of that stock? So
good point. Interesting tweet from Michael Burry. He just said, and so Amazon says to GDP, there's your weakening consumer. So looks like things might be rolling over there. I don't know. Is this a bellwether?
So interesting because Amazon's retail side of the business was actually did look a little bit weak. Now their AWS business, their cloud hosting business was just gangbusters. The numbers looked insane. They continue to accelerate. I mean, they're growing at such a high rate at a business that's already got a lot of scale. It's really unbelievable. But I'm not as worried about the consumer yet, because when you look at Visa's results from earlier in the week, Visa showed amazing consumer strength. I mean, Visa's numbers, they were up like 20-30% on consumer card spending across debit and credit. So the consumer from Visa's eyes, who has a very wide, spectrum of consumer spending views, they actually showed that the consumer is out there spending in very like aggressive ways still. So it's kind of a mix shift from goods to services, I think, is what's really happening. I think we're starting to really see that shift play out in the numbers of these companies. And so, I expect like travel numbers, for instance, look really good. I think one of the airlines that reported earlier this week, there was a quote from one of their earnings calls where they said, this is the highest demand environment that they've ever seen in their career, as far as demand for like bookings, like months ahead of time for some of their routes. So that goes to show you right there. I think the spending is just shifting from, a lot of the COVID beneficiary and physical goods to, fun stuff, events, services, travel.
Yeah. I mean, even anecdotally, like we know, we've been having to book flights into late summer because things have just been booking up and flights have basically doubled in price in a lot of places, right? Like it used to be able to fly to Asia first class or business class internationally for like $2 or $3 grand. Now, when you're looking them up, it's, $4 or $5 grand or more. Right. And also I talked to a buddy's mom the other day, who's a flight attendant, that she goes to Europe quite a bit. She's like, this is the craziest I've ever seen it. She's like, the planes are packed. And I guess even the TSA numbers are kind of reflecting that if they're not already back to pre-pandemic levels, like they're pretty close. Right.
Yeah. I think international is still the level that's just lagging a little bit. And that is particularly true in the case of Asia, because, a lot of the Asian economies have still been slow to reopen. But I mean, otherwise, I think every other indication, in domestic travel, for instance, shows like, multi-year strength and booking levels above like pre-pandemic. So I mean, I think on that side, it's very clear. But I mean, I think, look, the jury's still out on the consumer, because they're undeniably going to get hit by inflation on energy and food. And there's going to be some weakening, particularly, I think, among some of the, the lower income or lower wealth ends of the consumer spectrum. But I don't necessarily think it's a given that this is going to roll over into a terrible multi-year recession. So Yeah, I'm not convinced of that yet.
Yeah, I mean, look, what are the options? Either continued recovery, deep recession / depression, or kind of stagflation, right? Where inflation stays high, productivity kind of sucks. Like, I know, we talked about this a couple of years ago when we were looking at the possibilities, and when COVID hit, everybody was looking for just depression style prices. And granted, Daddy Fed came to rescue. Uh, but again, with all the money printing, we're now getting the repercussions of that in the form of higher prices. And I don't know. Do you still see a high possibility of like a stagflation type environment, or are you thinking just quick recession and then recovery and back to normal?
Yeah, no, I do think stagflation and a mild recession are still a very high probability high probability event, or high probability possibility. I
Yeah,
don't know if
there
that
you
makes
go.
sense. But yeah, no, I think that's still very much a strong possibility. But I, I guess what I'm trying to say is, like, I don't think that, there's a lot of people that are saying we're just literally rolling into recession already, and that, the uh, consumers are done, and we're going to see, like 0809 levels of crisis and things like that. And I'm just not sure that I'm convinced of that either. So I do think there's still a path also for us to kind of maybe see a weakening economy, but not necessarily go into recession. So I think a lot of it just really depends on what happens here with energy prices and some of the big drivers of what we've seen in inflation. If we can get some relief on some of those things, I think we could actually come out of this just fine as a global economy.
Let's game this like a chess game. All right, let's think about some possibilities and probabilities, and just think through what we would do no matter what the market threw at us. So for example, like, if we do get a recession, what would that look like, and where would the opportunity be? I know, correct me if I'm wrong, but 2009 was your biggest year in the hedge fund days coming out of the '08 recession, right? And that kind of launched us into this massive bull market that we've been in for over the past decade. If we got something like a recession, that's not necessarily a bad thing. If anything, that would just give a ton of opportunity, and we'd be ready to buy at lower prices, right?
That's right. Yeah. There's obviously some real, like, human pain that happens during recessions. Some people will, lose their jobs for some amount of time, but overall, as investors, especially younger investors, we kind of welcome sell-off environments and bear markets, as long as you're not YOLOing massive position sizes into stuff that never recovers and that, goes into bankruptcy. Then these present some pretty compelling buy opportunities in a lot of cases. So yeah, I mean, I think we'll see tremendous opportunities if we go into, a 30, 40, 50% market correction type of environment, just like we saw. I mean, how many times have we seen this even in the last decade, right? We saw it in the March COVID panic. We saw it in the fall of 2018. We saw it, of course, in 08, 09 as well. Like you said, like, we had our best year ever at our hedge fund in 2009. And, that was set up because of what happened in 2008. So I think you obviously have to be careful going into it, but I think ultimately, if you stay in the game and you've got, like, capital to be able to participate, then those become potentially some of the best wealth generating environments you'll see in your career.
Yeah. That's what I'm always hungry for, is like, where is the next panic going to lead to the next opportunity, right? I mean, we can just look again at kind of Bitcoin's price history as well. And I mean, some of the best buying opportunities came when, it looked like Bitcoin was done for, right? Look back at the early part of 2015, we were here buying in the 180s. People were literally on Twitter just rage quitting. Then you had that same thing after Bitcoin broke down from 6K into the 3K range at the end of 2018. And then here we are, kind of in this funky holding pattern. We're definitely not around all-time highs where, people are just losing their minds with euphoria, but we're also not in the depths of hell. We're basically call it a 50% haircut off of the all-time highs with a shit ton of volatility. I mean, these are massive, massive moves. And as kind of a cycle trader, I always get really excited when there's elevated levels of fear, and I get kind of just tempered when there's a mixed bag, right? I mean, there's choppy price action for a reason. It's because some people are super bullish, some people are bearish, and there's a fight between that. And price is found in equilibrium around 45K. And I always laugh when people complain that Bitcoin's only at $45,000 when just a few years ago we were in, the low hundreds, right? Like it's wild how fast this has grown. So yeah, I don't know. I guess the point is for me on the Bitcoin and the altcoin side, I'm almost expecting or looking for more blood. And if we don't get it and the trend continues, that's cool too, because we can trade it on the way up. But I'll just take a look at the total 3 chart, which is all the total crypto market cap, excluding Bitcoin and Ethereum. And you can see even without Bitcoin and Ethereum, I mean, this is still only, 40% off of all-time highs. And we've been consolidating. Price has been squeezing, basically for the last 6 months or so. And it looks like altcoins are really getting primed for some explosive moves here. And we're starting to see what I call the popcorn effect, where you're getting some newer projects that are gaining momentum. And granted, you got to be careful in an environment like this. You don't want to just throw your money at a bunch of random shit coins. But whenever you start to see these newer projects like Ape, put in these short accumulation ranges and then start to break up, this is what I call the popcorn effect, where 90% of altcoins are well off of their all-time highs. And then you start to see 1, 2, 3 coins start to show signs of life or momentum. And then that momentum begets more momentum, meaning higher prices bring in more people that drive it to more higher prices, right? So it's just like bear markets, selling can beget selling, which leads to more selling, and it's reflexive in a way. The altcoin market is very much like this, where it's like Bitcoin starts the show, Bitcoin's the DJ. Then you have some legacy large caps like Ethereum, and, you could even call DOT one of the newer ones, but they start to pop off. And then that capital flows into the smaller stuff. And so the cool thing about where we are right now is there's still a lot of innovation. There's still new projects that are coming out, and there's still opportunity to trade this stuff and to hunt for opportunity. But you just have to, in this environment specifically, be a lot more careful and not doing the shotgun approach where you just buy like 200 or 300 coins, because odds are 99% of those are going to zero in the future. So you've got to be selective. You got to do the due diligence and the work and make sure you're getting in on the right ones.
All right. So I'm going to ask you about Ape. What's up with Ape? I don't know much of the backstory there. Is there something real there, or what's the story?
So I'm not going to speculate and give an opinion on the fundamentals of it. I look at every alt as a way to trade to accumulate more fiat currency and more Bitcoin. So I'll start with that. With that said, there have been obviously a lot of hype around the NFT side, and this is kind of a derivative or one of the fallouts from this latest wave. So I think we're going to see maybe a handful more like this, where there's newer listings that they start to buck the trend. So I just look at it as a ticker. I'm not going to speculate if it's going to be around in 5 years. I'm not going to tell anybody on the show that they should go buy it. Again, I look at these things as just trading instruments, right? Just ways to accumulate more fiat to eventually accumulate more Bitcoin and maybe a handful of other really high value stuff. But do I put Ape in that category? Probably not. Let's see. We got a comment. Michael Saylor says the traders and the technocrats control the market trading of BTC, and it's a function of the tug of war between them. But ultimately, Bitcoin will become the ultimate risk off asset. That I agree with that, right? That's a narrative. We know the bull case for Bitcoin, right? We know what it looks like. It's the best form of money that the world has ever known. Um, it's got all the properties, right? We've been talking about this for almost a decade now. And I don't know. What do you think of that, Trav? Maybe we can play like devil's advocate, or like, why could this not be true? Because I agree that this is a possibility. Do I think it's a certainty? No, the future is uncertain. I believe it enough that I have a pretty significant percentage of my net worth in Bitcoin, but I'm not 100% in Bitcoin because it's not a certainty. Trav, what do you think?
I mean, it's tough. I think that for a long time was part of the narrative that, Bitcoin was like a risk off asset in the sense where, it could be uncorrelated to other asset classes. It could, provide that scarcity value that, other asset classes might not have, or other assets might not have. It provides sort of an alternative to the existing fiat monetary system, et cetera, right? Those things haven't necessarily changed. I mean, we have seen a higher correlation lately with Bitcoin and stocks, but I don't know. It's tough because like the data right now is not really showing us that it's a risk off asset, that it's performing when other assets are selling off. So just kind of based on the data right now, like I'm not seeing that really play out. But in the past, we have seen periods where it did play out. So I would like to see it over time become more of that, asset that can perform during a risk off environment, like a flight to safety asset, right? The role that maybe gold used to play, or the role that, maybe even short-term government bonds have played for a while, over the last decade or two. But it hasn't shown itself to necessarily be that yet. So I think the promise is there, the ideas are there, certainly the conditions are there, but the data is not showing us that yet. So it's not something that I would be willing to, bet my capital on. Like if I was going to go, heavily into cash and you wanted a place to park that cash during a time of, market freak out or volatility, I don't know that I would be confident enough to put a significant portion of that into Bitcoin during a time when the market was, selling off, say, 5% in a day or whatever.
Yeah, this is where I think time frame matters, right? Like we've seen different market cycles, and right now, I guess the way that I would categorize what Bitcoin is doing or how it's behaving is it's trading scared. It's not taking on a life of its own, but that's okay. And the more conviction you have in the long term, which we actually got a question, I think before the show started, NH was saying, would love to work out a long-term direction for Bitcoin and then for most of the crypto market. Yeah, I mean, everybody would, right? Like that's the $200 trillion question, is like, we can look at the chart and we can talk about where Bitcoin's going today, next week, next month, but a year from now, 5 years, a decade from now, there's a lot of variables that come into play. And kind of my sweet spot, and the only thing that I really feel like I have an edge in time frame wise, is looking a couple weeks to a few months into the future. Anything shorter than that, there's just too much randomness. Anything longer than that, there's too many variables that could impact the thesis, right? So I don't know. I guess, yeah, if we're looking right now, it's not behaving that way. But, like Saylor said, ultimately Bitcoin could become the ultimate risk off asset. It's a possibility, but it's not a certainty, right?
Yeah.
All right. Well, what else do you want to dive into? I know we've talked about some of the most recent earnings reports. Apple, Amazon. Looking back at the calendar, were there any other big narratives or anything that stuck out this week that you thought were important or could give us insight as to what's to come?
Well, I don't know if it gives insight as to what's to come, but there's two sectors that in particular are kind of interesting to watch right now within the broad market, which are cannabis and biotech. Obviously, there's more that we can look at, but those two in particular stand out to me for being unique and how badly they've been beaten up as entire sectors, where everything in that sector pretty much is trading down. And so I've been early and I guess you could say wrong so far on the cannabis stuff. I was buying the MSOS ETF in the 20s, which I thought was a good price, down from 50 or 60. But the stocks that are part of this ETF all trade, are mostly profitable multi-state operators of cannabis dispensaries that are growing, that trade for very reasonable valuations now at these levels. And yet, the market's still selling them off, even though what I perceive to be as an amazing opportunity if you're willing to hold for a couple of years. Certainly biotech, you'll find some names in that sector as well that are going to have immense potential to become multi-billion-dollar companies that are, just getting crushed. So if you look at like the XBI index, for instance, as one of the biotech ETFs, that thing's been straight down over the last 6 months. So this is both, I think, I think it's an opportunity ultimately for both of these, like to be able to go in and find the companies within those sectors that are going to become the multi-baggers of, the next 5 years. But it really is painful. It's painful to be involved in sectors like that right now. And it's painful to be early, like buying MSOS in the low 20s, I thought was a great risk reward. And I think it's an even better risk reward here at 15 or 16, but watching those red numbers pile up in the account is tough. So yeah, I mean, I think playing this is like kind of a classic example of like, well, do you wait and pay it for confirmation, or do you buy on the way down? This reminds me a lot though of like energy back in, not only 2020, but when we saw the oil prices go negative, but also back in like, what was it, 2015, when we saw that first down cycle in energy that we'd had in probably a decade. And energy got so beaten up and some of those names just got so sold off. People would write silly articles about how like, oil was never going to go back above $15 and how like oil companies were dinosaurs and they were all going to go out of business. And everyone got out of oil stocks, like all the ETFs, like the S&P 500. I think like, what was it? Like 5 to 10% of the S&P 500 used to be energy companies. Now it's like 2% or less. Mm-hmm. So even the indexes, even the passive buyers of these stocks, we're jettisoning the stocks as they perform poorly. And yet now, look, energy is the best performing sector, one of the best performing sectors over the last year and a half. So as a contrarian investor myself, I look at this and I go like, there's going to be like potentially game-changing returns to be had in sectors like biotech and cannabis. Timing is a real question. I don't have great answers for how to exactly time that. But I do know that when you look at the businesses underlying them, some of those are going to be, strong businesses that will perform well. So those are areas I'm really interested in keeping an eye on as we go forward into this year.
Yeah. Well, I mean, that's how you make life-changing gains, right? Is you have conviction on an asset or an asset class, and you take bets and you live through the drawdowns, and then you're right? Like if you're wrong, you lose, but the way that you make big gains, like 2014, I was averaging down in Bitcoin, right? And then it was like when Bitcoin was at like $600 and Tim Draper bought the Silk Road coins, I was like, all right, man, if someone like Tim's getting in and, smarter and smarter investors are accumulating Bitcoin at really big levels, I'm like, there's something here, right? So when you look at cannabis and you look at biotech, like these industries aren't going anywhere, right? The only question is like, where are the winners going to be and how can you get in a way that manages your downside, right? Which is hard to do when you're buying blood. You never know how low these things are going to go. So I think that's why it's also important to have dry powder. Like if you just lever up on GME and that's your only holding, you're not going to be able to get into these opportunities, right? So being smart with your portfolio is absolutely key. And timing is impossible. Sometimes you'll nail the bottom. Sometimes you'll have to suffer through blood for a while.
Yeah, I think what you said really is spot on. I think I've certainly gone through enough drawdowns on individual positions or even, entire portfolio drawdowns at different points in my career. And, as long as I was actually putting in the work and managing my risk, like it has always worked out, knock on wood. I mean, maybe there'll be a time where an asteroid hits and it doesn't work out, but no, I mean, like there's a great quote, I think, from one of the macro, one of the legendary macro guys, was it Druckenmiller, I believe, who said, my best buys always felt like shit. He's like, it always felt horrible. It always gave me like a terrible feeling in my gut. But when I look back, like those were the most compelling buys of my career. So that's where I think I could be with some of these plays, like in with cannabis, where I'm like, I'm continuing to average down, and I'm not getting like overexposed from a risk standpoint. Like I have my position sizes that I'm comfortable with, but I think about it. I'm like, okay, am I willing to take a 50% drawdown on a 10% position to gain, 200 or 300% in an ensuing 2 to 3 or 4 year time frame? And I think, yeah, I mean, I think that math absolutely makes sense. It's just, it's difficult when you're in it. So yeah, I don't know if that helps anybody who's dealing with drawdowns currently on any assets or asset classes, but
yeah. Feel free to throw some questions in there, guys. If there's anything we can help you with or anything you want to take a look at, but I'll just kind of mirror your point about that. Like sometimes buying blood hurts both emotionally, mentally, and I guess logistically in your portfolio, like looking at the red. But if you have conviction and you don't completely screw up timing and you stick with it, like you're probably going to be okay unless you get over leveraged or you just misallocate your portfolio, right? That's why we talk a lot about just, I hate the word diversification in some sense because it sounds kind of weak, but it's true. It's like you never want to put yourself in a position where one trade or one investment could take you out of the game, right? That's rule number one, is don't do anything that's going to permanently remove you to where you have to go back and work a job you hate or something like that. So
well said.
Yeah. All right, let's take a look. Some people say Bitcoin is just a high beta leveraged S&P 500 token without any actual use case that needs a new narrative in order for a new bull cycle. Any thoughts on possible narratives? Yeah, I mean, look, there's opinions on the spectrum, right? You got the Peter Schiffs of the world saying Bitcoin's dumb and it has no use case. You've got the Michael Saylors on the exact opposite side, and everybody in the middle. I don't look at this as just a levered play on the stock market. Like it's a completely different asset class. It's not backed by earnings. It's a form of money, right? So A, it's a different asset class, and B, like at times it trades inverse to stocks. So it's still too early to really know. I mean, if we could fast forward another decade, then we'll truly be able to tell. But Trav, I don't know. Do you have any opinion on that?
Yeah, I mean, I think, if you look at returns, I don't think you could map the returns of Bitcoin to the S&P over its history very well. Even as like a leverage play, like the correlation's not that tight. Now we have seen correlation increase recently. Like I said before, we have seen the correlation between the S&P and Bitcoin rise in probably just the last like 3 to 4 months, but I don't think that's going to last forever. And I don't think you can make the jump to the conclusion that it's just a leveraged S&P token just based on 3 months worth of, higher correlations. There's a lot that's still going to happen in the crypto ecosystem with Bitcoin, even specifically. And, Bitcoin is, frankly, just a much smaller liquidity and asset size relative to S&P. So I don't see how it could be over the long term. Just a leverage.
Think about this. The entire crypto market, everything, all cryptos are worth Microsoft.
Yeah, that's mind blowing.
Fucking crazy. It's tiny still. It's tiny. We're still early, in my opinion. I don't know. This was a tweet I wanted to pull up. I thought was pretty funny. And this just shows you where we are. Lop tweeted, he said, Bitcoin hyperization, it's basically an exponential game of dominoes, right? So the first step was El Salvador making it legal tender. Then this week, Central African Republic. And then, we've got panel, right? It goes on down. And like this trend, I don't think is going to reverse. And some people look at these small countries and they say, it doesn't matter. These are tiny countries. Their economy is yay big. But the narrative was also minimalizing Bitcoin, 8, 9, 10 years ago, right? Like whenever I got into Bitcoin, everybody was like, why would you even get into this? You can't even really trade it except on these shitty little scammy exchanges. And no VCs wanted to touch it. No hedge funds wanted to touch it. Today, everybody wants to touch it, So I think that we're still early in the grand scheme of things. And I just like the visualization of like exponential dominoes. It's not like one domino knocks down another domino of the same size and sequential. It literally is exponential. So that's the bull case. And that's why I don't think it's just a levered play on the stock market. But we haven't seen Bitcoin in a bear market, right? Bitcoin literally launched at the absolute bottom of the '08 financial crisis, right? It was like, here's where Bitcoin started. So it's yet to be seen. We got more Bitcoin price questions. Cross was asking, I think Bitcoin's going to 30 to 33K. What do you guys think? Yeah, I mean, look, I don't make predictions. I create plans for all the possibilities. So I've got some extension targets to the downside if we do break down. And, if we get a washout over 30% into like sub 30K, I'm probably going to be there buying that dip, depending on how fast. If it's a fast washout, I'm buying it. If it's a slow bleed, I'm not going to try to catch that knife, but that's just how I trade.
I think it could depend, by the way, on the severity of what happens in stocks this year. I do think from my vantage point, when I look back at just recent cycles, like March of, recent down cycles in the market where you had a rapid sell off, like, for instance, obviously March 2020, but also the fall of 2018, Bitcoin didn't sell off super hard, if I recall, until like November, until like really the worst part of the sell off in equities. So the worst part of that 2018, just to give everyone background again, fall of 2018, Fed was raising rates. The market started freaking out. Stocks took about a 20% drawdown in the indices from like September through late December. And the worst part of that really happened in like November, December. So you did have a sell-off, if I recall, in Bitcoin, like, what was it? November, like mid to late November, I think was the worst part of it. It gapped down. And so again, I think it's like we saw also in 2020. If you get a deep enough pullback in risk assets like stocks, I think you could get that final washout that we're kind of hoping for in Bitcoin. If the stock market just stays choppy and maybe even like recovers a little bit, we probably don't. I'd be really surprised to see us get that dip in Bitcoin, but.
Yeah, Bitcoin in 2018, I'm just marking up the chart here. Bitcoin actually led the stock market in the panic. So we had this 6K line of hope, we called it, where, it was like Bitcoin was like bouncing into 6K. And each time it bounced, it's just like a basketball, right? It bounced lower and lower and lower and lower and basically squeezed, and then ended up dumping here in November of 2018. And then what happened is the stock market, a little bit later, so this was like into December, it had its final leg down where it sold off. That final leg was about call it a 10-ish% panic. But I guess you could say Bitcoin pulled the stock market down. Not really, but it actually leads stocks. But I agree with you, Trav. Like, if we got a panic, let's say the S&P, we're only down from the all-time highs, we're down 10% off of all-time highs. If stocks take a 30, 40, 50% haircut from the all-time high, I would be surprised if Bitcoin didn't go down with it.
Yeah, agreed. Totally agreed. That was interesting. I didn't realize that Bitcoin had kind of led the deepest part of the decline in stocks in 2018. So it actually would argue potentially that's something we need to keep a close eye on from my vantage point on the stock side, is I need to keep a pretty close eye on what the crypto ecosystem and Bitcoin in particular are doing, because it could be potentially a leading indicator for what happens in stocks. That's a point worth noting.
And Bitcoin actually recovered way later. It actually had about a 3 or 4 month consolidation period where it was basically flat from that panic. Meanwhile, stocks were already up 25%. So that's why I'm like, you can try to find correlations with Bitcoin in the stock market, but you also want to look for times where they're not correlated and where one's leading the other, because you can find clues there too. Just like correlation can be a help, uncorrelated price action is also helpful. And I prefer when Bitcoin's not correlated with stocks, but it ebb and flows.
Yeah, that's a great point. That's something to really wake up to. If we see the correlation breaking, that's just as important and worth paying attention to, because there could be like cross asset class trading opportunities there.
Yeah. Good point. So Coca, to your question, do you see Bitcoin dropping 80% from all-time highs? I think it depends on the stock market. And if it does, I will gracefully bow to the Bitcoin gods for the opportunity to buy more lower. Some people look at lower prices as a curse. I look at them as a blessing. Now, obviously, if Bitcoin goes down and never comes back up, that would suck, but I don't think that's going to happen. Spicy Loops. If you have money in the bank and the economy crashes like 2008, will you lose your money? Well, I guess if your bank defaults, you potentially could, but that's why you have FDIC insurance. If Armageddon hits and the banking system collapses, I guess all bets are off. I don't really know what country you're in or if you have any protections, but that's why in the US, at least, we have this veil of protection, which I don't know, Trav, what do you put much weight on that?
Yeah, I mean, luckily we didn't have to test the FDIC or SIPC insurance even during the 08-09 crisis. Maybe it got, it did get a little bit close there for comfort. Yeah. Some people's banks did actually go out of business during that time frame, but mostly those were acquired by other banks, so it ended up being okay. I hope we don't have to test the FDIC insurance system. Look, I think when I look at bank balance sheets today, they're in far better positions than they were leading up to the 08-09 crisis. It doesn't mean that they can't weaken because of credit losses if we go into a really severe, market environment for a few years. But today, I mean, it looks relatively healthy. The banks, they put in all those regulations after the great financial crisis on the large banks to make them hoard more capital on their balance sheet for tough times like a recession. So
yeah.
When I look at it today, we're in a much healthier place from the banking system side than we were back in 08-09. So hopefully, even if we go into a recession, that everyone's money will be safe in most of the major banks in the US. Outside the US, again, like you said, I don't know. I haven't really spent much time looking at non-US banks.
It's healthy until it's not. And then when it's not, it's too late to matter anyway. So that's why maybe you should have some Bitcoin on a hardware wallet. If the shit does hit the fan, you've got hard money that you can store digitally in your mind or on a hardware wallet or whatever and carry value with you wherever you go, no matter what governments fail or default or whatever, right? Like we can speculate all day long, and there's sure as hell a lot of people that love to sell fear and that love to talk about the pessimistic narratives, which I think are valid to entertain, but it doesn't mean that they have to play out and that the world's going to end and we're going to go into a depression and the stock market's going to go away. And, I call them like crypto doomers, right? Like there's people in the crypto space that love to just hammer the fear narratives. And it's like, okay, look, there's a possibility, there's a percentage that the world could come crumbling down and we could have nuclear war and all this shit. Okay, but like, do you want to focus on that? And like, if that happens, does any of this matter anyway? Like, let's focus on the more higher probability scenario and just continue to truck away and build wealth the best way we can, because that's what's in our control. That's how I think about it.
Very well said. That's also how I think about it.
Cool. Nikki's chiming in. Here's a financial planning tip. Do your best to make sure your bank account balances are at or below FDIC insurance. May require multiple bank accounts to protect. Yeah, I mean, that's what we do, right? Like, think what is it? 500K is the limit for married and 250 if you're single. So yeah, just break up your money, diversify. I don't know if I'd bury money in the backyard because a hamster could get to it, but 250K per depositor per issued bank for each account ownership category. There you go. Chris, what if we get the dip in May, sell in May, walk away? No, I don't know if I subscribe to that. Trav, when was the sell in May and go away narrative really the strongest? And is it even viable today, or are we in too much of a connected world?
So, those patterns tend to get, competed away over time if they're super simple patterns like the January effect and the sell in May and go away. But I will say, look, there are studies that show a little bit of a underperformance of stock markets on average. It doesn't happen every year though. It's just on average over decades and decades of market cycles. There is data that shows the stock market has historically underperformed in the June through August months versus other parts of the year. So some of those calendar effects appear to still be in the statistics, but again, in any one given year, it may not hold. This is very slight statistics over decades of market return data. So
yeah,
we have seen some weakness in some years recently in summer months, but it's just not that simple. And it's not something I would be taking all my money out of stocks or putting it all in at certain times of the year based on a very small statistical average.
Yeah. Whenever I hear things like that, I think of the real world situation that creates that, right? To me, back in the 70s, 80s, and maybe even early 90s, it was the stock market was more of an analog thing where it was, people on the phone, people mailing checks and wires and shit, right? And so it was people in the summertime went on vacation. Maybe they didn't think about the stock market so much. But my guess is going forward, I remember in the early 2000s when E-mini futures started trading and we had these big computer monitors and people were just getting DSL internet to their homes and you could trade from home. That was such a weird thing for people. Today, it's you could be anywhere in the world and you've basically got a direct connection to any stock exchange that you want. If you're through Interactive Brokers or TradeStation or whatever, you can trade most markets around the world. Any crypto exchange, you can trade most assets, unless you're in the US where we have way too much regulation, if you ask my opinion. But we're so much more connected than we were in the 70s, 80s, and 90s. And I just think people aren't going away in the summer. They're connected all the time.
Yeah. I mean, if you look at even 2020 and 2021, we had positive returns in stocks during the summer months from June through August, basically.
Yeah.
So it didn't really ring true over the last 2 years either. So yeah, I agree. I think those things are not great signals, especially for any given specific year. Not to say it can't happen. Look, I mean, we know that the market has been hitting some key technical levels, and if it breaks below, it could be a rough summer, it could be a rough fall for stocks. But it's not something, like I said, that I would be betting all of my allocations on.
Yeah. Cool. Well, look, guys, we've been going for over an hour. We can start to wrap it up. Let's just do a quick recap of what we talked about today. So far, we've looked at, I think, most of the big earnings plays or ideas from this week. Kind of a mixed bag. Trav, give us one sentence. What's the vibe from this week?
The vibe from this week is you better put up or shut up with these companies. They better put up amazing numbers or the market's going to take out their stock. So it's still very much an environment where the market is show me good numbers or else. And it's tough. It's tough as an investor and as a company. That makes it really tough.
We needed this slap in the face though, because 2020 and 2021, everybody was having that get rich quick mentality and, the GME shit. And if you can survive times like these and you don't give up and walk away, you're probably going to build wealth and outperform everybody that was just chasing the easy gains over the past couple of years. I think that's something important to mention too, that when things are boring, when things are down, when things are harder, if you stick it out and you build your skills during those time periods, that's when you make life-changing gains in the future, right? But everybody's so reactive, right? Most humans are not programmed to be good investors. They do the opposite of what makes a good investor. I actually tweeted about this the other day where I said like I wanted to point out like what I thought or who I thought were naturally talented or just like more apt to be successful traders and investors. And the ones that I've seen over the past like 20 years that have really stood out that make great traders and investors are people like pilots, firemen, commercial like divers that dive to like 600 feet underwater, and then poker and chess players. Basically people that are used to assessing risk, right? And then making high consequence decisions with incomplete information, right? Like think of a pilot, like it doesn't get much more high consequence decision, right? If you're in battle or you're, a rescue pilot and you're flying around and you're making these decisions on the fly and you're assessing risk, or you're a fireman trying to figure out, do I send my guys in, or, what's the risk of this situation? I don't know everything about the building, right? Those are people that generally do well, where the opposite of people that like struggle as traders and investors are people like attorneys and CEOs and managers and salespeople, people that are accustomed to forcing their will on the world, or like pushing. Those are people that typically struggle because they're used to being able to manipulate people and things and situations, where in the markets, if you try to do that, if you go in with the bulldog attorney's mindset, or the entrepreneur, I'm going to get as many sales as possible mindset, it's actually the opposite mindset that makes you a successful investor. You've got to have confidence and you've got to be bold, but you've also got to realize that releasing control and knowing that the markets are outside of your control is very, very important. Little tangent there for you.
No,
Right.
I love that. I think that's fascinating. It'd be interesting to see some studies on that too.
Yeah,
Because
that's just anecdotal from me, by the way. Yeah.
Oh yeah, no, but I conceptually it makes sense to me, and I think like that would, it's funny because I have seen a lot of people that play poker or chess in in the world of hedge funds. Some of the smartest, some of the smartest macro guys and equity long short guys that I know do play like poker or chess or games of odds, where they can really think about like upside, downside, probabilities. I myself have spent a lot of time, thinking about that and thinking about position sizing, risk management, Kelly criterion, read Ed Thorpe's, all of Ed Thorpe's stuff. It's, I think it does help. But like you said, it's not just like sometimes when we talk about like risk management, for instance, that phrase always sounds super like boring and wimpy, but what that encompasses is also like, being able to take an asymmetric bet and put some capital on it when the probabilities come in your favor. So it's not just about like diversification or reducing position sizes. It's actually also about when to know to put on a position size and go big.
Yeah. It's about being nimble, right? Like sometimes you got to have the cojones and you got to know when to push and you got to slam on the gas and get uncomfortable, right? Like you were saying, was it Druckenmiller that said some of his best plays were the most uncomfortable?
Yeah.
Yep. Yeah. Let's see. We got a couple questions here. Nick was saying, I heard Chamath on the All In podcast say the best approach to tracking altcoin growth is to follow the developers. What's the best way to track developer activity? That's a great question. I agree that that's a piece of it, but it's only about a third of the pie. So I'll put that in the fundamental analysis category. So when it comes to looking for good crypto trades or investments, again, I'm an active trader. I like to get in and get out and take my profits and go improve my life with it. But whenever I'm analyzing an opportunity, I look at the technicals. So the chart, right? If there is a chart, I look at the fundamentals, which developer activity is a piece of the fundamentals. And then I look at market sentiment, meaning what's the hype around it? Is the media talking about it? Is there a cult following? But I do agree that looking at development and looking at developer teams and who's behind the project and activity is one of the best ways to know if there's actually substance there. And so one way that you can look at it is if there's a GitHub, if there's any commits, if there's any Reddit subreddits, or if there's any Telegram or Discord channels where developers or people behind the scenes are actually doing activity. So GitHub commits are a quantifiable metric. And then there's a lot of other, I guess, some easily quantifiable, some more subjective ways of analyzing developer activity. But after you look at it a little bit, like, you'll be able to figure out pretty quickly what's a ghost and where there's actual real work being done. But just because there's real work being done doesn't mean that price is going to have a bull cycle, meaning where it goes crazy. It takes real people buying and real activity there. And that's why the chart, I think, is the best way to analyze the reality of the situation, because you can see the actions of all market participants in the price action. So when you know you have a high quality project combined with a really beautiful chart, combined with, strong market sentiment, and Bitcoin is strong / stock market, right? The macro or bigger picture, right? There's capital flowing into the ecosystem. When all those things align, that's where the highest probability of massive gains come from. But if you have a great project and great sentiment and a great chart, but the stock market dumps and Bitcoin dumps, that could, at least temporarily, put a hindrance on the growth of the price of that project or the value of that project.
Yeah, very well said. You can actually go into GitHub, by the way, and go into like the Insights tab, on some of these projects like Solana, for instance, and see like a graph of commits over time and also like contributors over time. So yeah, like that's a very easy way to do it.
Yeah. Great point. Got a couple comments. I learned about Bitcoin from you, Chris, in 2017. When Bitcoin was 1K, a video popped up on my homepage. Bought at 1K, sold at 5K. There you go. 5X, easy gains. BG said, was going to say, luckily I avidly play both chess and poker, so crypto making more and more sense. Yeah, it might be right up your alley. There you go. To be honest, after 5 years of looking at YouTube channels, this is one of the best ones. Appreciate what you guys do. Yeah, we appreciate you guys. That's why we do it. Tay was saying pilots for sure. During my time in the military, actually, it was a pilot that got me into my first real investments during the 2008 crisis. Yeah.
Dude, pilots are so badass.
I agree.
Oh, man.
All right. What's your opinion on XRP? So Ripple, the chart looks like dog shit right now, and the project is sketchy at best. I like non-centralized tokens. Again, I know there's this whole Ripple army out there. There's people that are very tribal about it. I'm agnostic. I look at everything through the lens of a trader and an investor. And even with Bitcoin, I am bullish on Bitcoin, but am I a Bitcoin cult member or leader? No. I don't identify myself with any, asset. But when it comes to, I preface that with Ripple because I just know like Ripple and a couple others have people that are just very, very diehard. The SEC problems aside, I just don't like the tokenomics behind Ripple. So that's my opinion. The Riyadh, hey guys, what are your thoughts on the gap on the Bitcoin futures at 32,500 area? Yeah, so I look at Bitcoin futures when there's something obvious to kind of focus on. So the gap you're talking about at 32 is from July of 2021. So July of last year. how I would use that, like, I don't think it's a predictive factor, but I do like to look at open gaps in the CME futures. And if we started to panic off, I would look at that as a potential bounce area. So depending on where it came from, I may or may not take action on that. But yeah, that's a piece of the puzzle, is looking at gaps and other important areas based on the CME Bitcoin futures. But I don't use it as like an anticipatory thing where I guess that price is going to run to it. I just respond if we're getting action around that area. Hope that makes sense. All right, guys. Well, we can go ahead and start to wrap it up there. Trav, anything else you want to talk about or cover while we're here live with everybody?
I think we covered a lot of ground. Tay's got a good question, but we can table that one maybe for the next show, because I feel like that would be a good story for you to tell.
Did I miss it? Can you talk more about your days before you got your house foreclosed on and decide to go out on your own as a trader? How, where and how did you muster the confidence? Yeah, I mean, I'll just give a real quick one and then we can wrap it up. But basically, so I was in the mortgage business and was actively trading on the side while I was in the mortgage business. I started trading in the early 2000s and when I was in high school, and then went into the mortgage business, did pretty well with that, climbed the corporate ladder. And in the around 2006, so after the big real estate boom, mortgage companies, we saw first and foremost, like, these people cannot qualify for these homes, and mortgage companies just started falling. So 2006 into 2007, things got really ugly. And I'm like, I see the writing on the wall. We're going to have a recession. Things are looking really, really nasty. And so I was kind of pushed out of the business just because companies were failing and the business dried up. And so it was kind of timing of like, hey, I hate corporate America anyway. I'm still in my early 20s. I want to make ripples on my own. So I just pulled the trigger and started trading and hustling on the side and doing everything I could to make money, monthly cash flow, to put into the markets, and started learning software development for trading software. Started just doing everything and anything I could to sustain my ability to trade. And then, fast forward several years, actively day trading, and then noticed over the years that the stock market got more and more competitive, meaning on the futures markets, the volatility was going down, the trading volume was going down, and the competition was going up. So people that were trading for a living were getting squeezed out. And thankfully, that's when I really started to take this little thing called Bitcoin seriously. I heard about it passively from like 2011, 2012. I thought it was a scam. 2013 came around and I'm like, okay, this shit is real. I'm going to go down that rabbit hole. And everybody in the trading world was like, what are you talking about, man? This is bullshit. But I had a lot of conviction, went all in, and the rest is history. So thanks for asking the question. I tweeted today a little bit about that, how, it's been 15 years since I quit corporate America, and I don't regret it for a single second. Went broke, bounced back, made my first million 18 months later, traveled to well over 100 countries now, and then built a life on my own terms. I look at it as like it's too risky not to do it. It's too risky not to take the bull by the horns, right? And Trav, I know you've had similar ideas where you've made kind of scary or major changes in your life, going from the fund to managing your own account to working at a startup. Like, what gave you confidence to make those big moves?
I wouldn't say I had the confidence at the start. You just have confidence that that you're smart enough to figure it out and get through it, and that you'll come out the other side. I think really one thing that I've always believed is that with like 12 months of really, really hard, dedicated work, you can change something major in your life, whether that's, career stuff, whether it's, your physical appearance, whether it's relationship stuff. I mean, I think with committed effort over that long of a time frame. And that's not that long, right? I mean, 12 months sounds like a long time, but really it flies. I mean, we're in almost May, and it feels like we blinked and, it was just the start of the year. But I genuinely believe that with 12 months of committed effort dedicated to a specific goal, that you can pretty much change your life in that area that you're trying to, accomplish or change. So, it's always scary, like taking a leap. Like for me on the hedge fund side, I was making significant amounts of money at the hedge fund and could have lived a very lavish lifestyle for the rest of my life and stayed at the fund for a long time or started my own fund. But there was something inside me that that told me that I needed to go do something else, that I needed to get some other experiences, things that I wanted to do internally. And it was terrifying. Like I remember even just like being scared to go, tell the founder of our firm that I was stepping out because I thought he would, think it was really stupid and that he wouldn't, take it well. Turned out he encouraged me. He said, yeah, go do it. Like now's the time. You're young enough. And that meant a lot to me, but also just like, just sometimes you got to take the leap without, having certainty and just having that confidence enough that you will figure it out, that you will get through it, that there will be other paths that branch off, even if it doesn't go exactly like you planned it. There'll be paths for you to take in most cases. So,
yeah.
Well
said, man. I like that idea of like setting, at least 12 months to make a change. Everybody wants the quick fix, right? The quick turnaround, but anything worth doing takes a lot of effort and it doesn't happen overnight. I mean, you might get lucky where like you wake up and you buy an asset and the next day it's up 1,000,000%. But for most of us, it doesn't happen overnight. But it can happen quicker than you think. And life's going to pass by anyway. Right. Yeah. So might as well put your best foot forward. Like you get one life and it's too risky not to fucking try.
Yeah. And look, you might have to take a step down in lifestyle or money or prestige to do something you want to do. But if it's something you really believe in, that's okay. Sometimes it's okay to take a step down to like, eventually take, the stairs up again. So
yeah, absolutely. Yeah. 10,000 hours, they say, to master a skill. Yeah. I mean, I put in thousands and thousands of hours in front of price charts and building trading systems and learning everything I could about trading. And that early work early in life set me up to really capitalize on Bitcoin early. And I'm nowhere near as smart as someone like Travis, but if someone like me can do it, you guys can do it.
Yeah.
All right. Well, I think that's a good place to leave it off, guys. One thing I wanted to mention, because we've gotten a lot of questions on this, I'll post this link in chat. We are getting ready to launch our 2022 trading and investing bootcamp. It's an 8-week bootcamp for stocks and crypto. You could do both or one or the other. And I'll post the link here in chat. If you go to skillincubator.com/bootcamp-early-bird, you can get on the waiting list. We've only done one of these the past 2 years, and each time it's booked up within the first day or two. So I know a lot of people have been waiting for this year's. So if you want that, go check out the video, get on the early bird list. We're going to do a webinar next week giving more details on the bootcamp. And so if you want to take this time when the markets are a little slow to hone your skills, now's the perfect time to do it. If not, that's cool too. No pressure, but we put a absolute ton of work into these boot camps. It's 40 plus hours of videos and live classes and stuff. And so it's probably the thing that I'm most proud of building. Trav, I know you've put a shit ton of work into yours over the past few years too.
Absolutely.
So we'll leave that link up. And if you guys have any questions, reach out to us. Go to wetalkmoney.com if you want to submit a question for the show ahead of time. Also, thanks to Y-Charts for sponsoring the show. And we will see you guys next time. Thanks for joining me, Trav.
Thank you guys. Thanks, Chris.
See you guys.